Hello everyone, I hope you are doing well. So quick video today. I will make the review of my today's morning trades. So quickly, let's go into the 4-hour. In the last video, I remember I told you that I'm targeting this buy side liquidity, okay? And after that, I was expecting some sell, So as you can see, we have mitigated this fair value gap, okay, on the 4-hour. And now I'm expecting, I don't know, also I talked about, the different setups. I don't know if you can see it right now, but this is one of my setups. Which one is it? It is, the accumulating buys plus new range. So you have all these buys, and we have formed a clear new range, which took some important liquidity and mitigated the fair value gap. So it is a valid range for buyers. But as you know, a confirmation for buyers, for me, is a confirmation to sell. Okay. And so right now, we have mitigated this 4-hour fair value gap again. We have taken some liquidity, but as you can see in the 1-hour, this is like a little trend line liquidity. So we didn't take all of it, we just started taking it. So for me, I'm still looking for downside. And I took a first trade, a first loss, because, sometimes you take the market for granted. So my bias was sell. I knew I wanted to sell, and therefore I sold, without paying attention to the most basic thing, which is inducement. So when I woke up, I just jumped on the first opportunity, to sell. So they start. But obviously, the stop losses were there. Why? Very simple. Because this is the high to low which broke the structure. Therefore, it is not good to sell in this range, okay? Because most people are looking to sell in this range. Most stop losses are there, okay? So it's good to follow the direction, but I don't know if you have seen my video, my way of trading, which is like the most important video of this channel to understand how I trade. The second point, so the first point is the direction. Direction for me, the TP, the TP for me is at least there, but to be honest, the real TP, not for the day, of course, but from now until we reach this area, I will be looking mostly for sales. It doesn't mean that there will be no buy setups. Of course, there will be buy setups. Even this morning, there was a buy setup. But mostly, I will be looking for sales until we take at least this liquidity. Okay? Therefore, yeah, this morning, quickly, my first sell, the entry was okay, because, I waited for like a type 1 shift of market structure. I sold inside this fair value gap. Okay. Stop loss above, of course. And the thing is, I took the market for granted because we made the first break. Now this become intermediate term high, right? And we broke this intermediate term high, which means this is not normal. And this is not, when you have such type of, noisy price action, it's okay to ignore it, okay? But now this is clear price action. This is something clear. There are fair value gaps, clear move. So when I saw this, I must have been taking break even, okay? I could have escaped this trade at break even because the entry was good overall, even though I was in the wrong place, because we shifted the market structure, but then we shifted again, That's why the most important thing is first the direction, and secondly, the place where you want to trade. And the last thing to look up for is the entry. Most people look first for the entry. It's not right, because shift in market structures, and there can be thousands, inside a single range, That doesn't mean anything. And so, yeah, you have a first break, you have, sorry, a second shift on the upside, which means that this become intermediate term low. You could trade the buy from there. And I think it makes like 20 pips, okay? A very small stop loss, 3 pips. Boom, you take the liquidity. Yeah, not 20 pips, 15. It's okay. It's okay. Quick bucks. And yeah, my second trade was more elaborate, because now I understood that we have taken the stop losses. So, the power of 3 from ICT. I've already explained it, but I will explain it again for those who didn't see. First point is accumulation. So we are accumulating what here? We are accumulating sales, because, with this range, we accumulate sales because we have just broke this structure, okay? We accumulate sales. The second step is the manipulation. And manipulation means we will take the stop losses. Stop losses are there, okay? So you wait for the manipulation, and then you can look for a shift in market structure, okay? I've looked for the shift, I've taken the trade, and now I'm targeting at least this sell side, okay? I could also target, this, and I could, on the longer, view, I could target this, but as you know, I'm not a long-term swing trader or whatever. I take my percent when I can every day, and that's it. That's my job. I'm not here to forecast the long-term price movements of the market. I'm not an investor. And therefore, yeah, third point for me, distribution. Okay. Distribution, it is made on sell stops or buyers stop losses, if you prefer. Okay. So this is the power of 3, or like I like to call it like this, it's a W, boom. Here you have the breakout structure. People will try to buy and you sell, okay? And on the reverse, on the buy side, it's not a W, it's an M, okay? People will think this is BOS, okay? Put their stop loss right there, and you buy either from an order block or from a fair value gap or whatever. Boom. Okay, this is simple stuff. And the MW, it often works when we start taking the liquidity, okay? And it doesn't want to pull back higher. It just do a W for inducement purpose, and then we continue, okay? So, yeah, let's come back to the trade. So I took a loss right there. Okay, first stop loss. Then I waited for the BOS. Okay, inducement. So we got the inducement. We got the TP. And now we are looking for the shift. Okay. And I traded from, yeah, really from there because, no, yeah, I traded from there exactly. Because I saw, the shift was more clear below this, but when I saw this short-term high, intermediate-term high, and short-term high, and then a big fair value gap, I was okay to sell from there. It's a little bit riskier, but you never know if it really goes straight, and it's not really FOMO because I could trade like from this fair value gap, it would be FOMO because it's not a shift in market structure, okay? But since we mitigated the only order block available, which took the last high and with, order flow and everything, and the intermediate term high, etc., everything was aligned for a sell. So I took the sell right there in this fair value gap, stop loss above, and I took some partials below here, okay, below this order block. And as you can see, a lot of unmitigated order blocks. 1, 2, this 3, this one which we already took the stop losses, and in the 5-minute also this one. This one is beautiful because people will trade from this. Now I'm waiting to get into this liquidity and this liquidity, but since I already took some partials, and I will wait for it was how much? Yeah, almost 20 pips. That's why I took some partials. Because we never know, since the price action is pretty slow. Even though I expect a lot more downside, it can always, come back around break even and then boom. So yeah, that's it for today. Tomorrow also I would expect downside, for many days, but maybe we can get pullbacks. We never know what happens. So I cannot tell you from now what will happen tomorrow or this afternoon. Yesterday, I didn't I tried to sell yesterday because, of course, we had this big push on Tuesday and I was expecting a sell. So I sold somewhere there. No, not there. At 9. Yeah, probably I sold from there, but then it took me out break even and I didn't try to sell again, because it was not clear. In the 1 minute, the entry was not clear, therefore, as you can see, right after, again, boom. And in the afternoon, I don't trade, so I didn't catch the sell yesterday. But today, I did catch some pips. And yeah, let's see what it gives. And that's it. So yeah, I've talked about the power free, the W, and yeah, I consider this as an intermediate term high, because let's say this is the short term and this is intermediate term, and in the 4-hour, of course, we mitigated this nice fair value gap. Okay, this was important, I think, because people are buying from there, even though maybe some people put their stop loss below this red candle, but mostly I think they will include the green candle because it is eating the the right candle. So most people's stop losses are still available below. Okay. So yeah, thanks for watching, and trade safe, trade mindlessly.